Welcome to today's Pre-Market Explainer. Let's dive straight into the macro drivers dictating this morning's opening bell.
Today's dynamic is classic bad news is good news. Weak economic data is actually fueling strong equity futures.
The big macro catalyst this morning, the July employment report, which came in surprisingly soft.
July non-farm payrolls outright contracted by 23,000, completely whiffing the street's consensus of an 86,000 addition.
Adding to the weakness, previous months saw heavy downward revisions. June dropped to 20,000 and May hit 63,000.
Wage inflation is cooling too. Average hourly earnings rose just 0.1%, missing the 0.3% expectation. The unemployment rate ticked down to 4.1%, but labor force participation also dwindled to 61.4%.
This sudden labor market softness is exactly what keeps the Fed strictly in a wait-and-see mode.
Because of this, the market's probability of a September 25 basis point rate hike plummeted to just 42.1%.
This data totally tanked bond yields. The two-year note dropped to 4.16%, easing a lot of market pressure.
Moving to energy, markets are surprisingly ignoring Iran's draft plan to bar vessels from the Strait of Hormuz.
Oil remains remarkably calm today. WTI dropped to 76.86 and Brent fell to 81.74 a barrel this morning.
So, what's the trade setup? A cooling economy and sliding oil are giving a massive bid to equities today.
The S&P 500 is already up 2.9% this week, holding crucial consolidation support right at 7,700.
Futures are super energized right now. NASDAQ 100 futures are surging 365 points, trading nicely above fair value.
S&P 500 futures are keeping pace too, currently up 42 points and sitting 0.4% above fair value.
And Dow futures are up 174 points, putting them 0.2% above fair value going into the open.
Rates are cooling and stocks are warming up. Will this consolidation trade actually hold these gains at the bell?